For an analysis on the metals market, let's go across then to Darren Sinden. He's Senior Sales Trader at Silverwind Securities, and he joins us on a London phone line. Darren, hi, welcome to the show. How are you looking at the gold and silver prices now? I mean, we are not looking at any safe haven buying happen into this space. Essentially, in case of gold prices, do you think there's some more decline coming in?
Yeah, I do actually. In fact, I've just been writing about the price of gold, and I think it's quite possible that we revisit the 6-month lows that we saw in gold in November. December. 15.22.40 was the low point on the 29th of December, and I think it's quite likely that we could head back there. But for that to happen, we probably need to see the dollar continue to strengthen. And so we've got our eye really on 129 even in the euro, looking at that really as a key level. If it breaks that, then I think the price of gold is going to weaken. To get there, we might need another macro shock, and you identified Spain and Greece as areas of concern, and that's the kind of area that we may well see a shock from. Of course, we saw weak economic data out of India and China again today, and so people have their eye on emerging markets too. Global growth is a concern. Gold bugs have disappeared really. We've been questioning where they've been for the last couple of weeks. They've run to the sidelines. A strong dollar, very little support for gold, and other asset classes have come to the fore really since the turn of the year.
Darren, between gold and silver, which one do you think could really decline more sharper? Because silver has been more volatile, has seen sharper declines in the last few sessions than gold.
Yes, you're right. Silver is the more volatile of the two, but silver, of course, does have a physical end use in industry, in medicine, where of course gold is really any use for jewellery or the store of value if you believe that. No, my money's on gold. I think we've had a tremendous rally. We're still up in gold over the year, about 1.3%, but I can see that disappearing, and perhaps in the fullness of time, the 5% gains we've made over the last 52 weeks could go too. So we're bearish of gold. We think there are further macro shocks to come. We think the dollar is likely to continue to strengthen, assuming, of course, that the macro shock doesn't come from the US itself. We look for a move in gold, perhaps down to as low as 1471.40, which would be the 52-week low.
Darren, how about the energy space? Because for the last 2 weeks, we have seen very sharp declines coming into this one as well. $95 is holding on NYMEX, 110 in some sense for Brent as well. But are you looking at further declines as we go into the next week?
No, I think we've probably seen the bottom in crude. We've had an 8.4% fall on the month to date. The one concern, of course, is the continuing building supplies in the US. I mean, only this week we saw an inventory rise of another 3.65 million barrels, and in fact, private data released on Tuesday suggested that the real build was as high as 7.8 million barrels. The political risk has gone out of oil for the moment. Iran's come to the conference table. There's not been any shooting match in the Arabian Gulf. Demand side of the equation is mixed, but I think the froth has been blown off the top of crude at the moment. We're not looking for a particularly large fall from here. More of a consolidation around these levels, and perhaps a couple of dollars lower. But we think this is probably a fair price for the contract at the moment.
And finally, on the base metal sector, Darren, how do you look at that one? Because the China data that has come in today has been more negative than positive. And apart from all the Eurozone concerns and not so good data from the US as well, how are you looking at that sector?
Which sector, sorry?
Base metals.
Base metals, okay. Well, look, we track copper as a proxy for the whole sector. And it's really failed this year to make any headway above, we follow the COMEX contract, so $3.80 per pound. It's broken down quite strongly from there over recent weeks, moving below key moving averages that we follow on both a weekly and daily chart. If we look really at £3 or $3.60 a pound, rather, I should say, as a key level, if we break that, then I'm afraid to say that we could find ourselves coming back down to 3.40 and maybe a smidgen below that. So I would keep a very close eye on $3.60 a pound in COMEX copper, and watch the macroeconomic data out of Asia, because that is really the determining force. There has been a drawdown in inventories over recent weeks in warehouses, but nonetheless there is always a big bull account of copper in Shanghai. So supply isn't really an issue here, and I think the demand side of the equation is going to drive the price. And if we see a further reduction in economic activity in Asia, or maybe even a faltering US economic recovery, then I think we could test to and through that $3.60 a pound level.
All right, Darren, thank you so much for joining us with your view on what could be commodities doing in the coming week. Of course, copper, or rather, the crude prices have declined nearly 9% in the month of May, and as Darren is saying, too much of a decline from these current levels, at least for the near term, is not expected.